Good morning, everybody. Hey, welcome to Tuesday, March 19th. Hey, looking forward to our discussion today with Dave when we talk about some of the economic issues and what's happening in the marketplace. Hey, Dave will be with us momentarily. Hold on, we'll be right back.
21 here before 9. Time to check in on your money. How is Wall Street doing for you this morning? Well, not meaning to give you a spoiler, but not half bad early on. Let's find out if it might continue. Downtown Sebring, we head to the offices of Statler Financial Services. Phillip Statler standing by. Phillip, you and I were trying to sort out what a whole bunch of indications mean this morning, and we kind of got where a weatherman goes. We think, but we don't know, right?
Well, that's true, Dave. We just don't know. There's so much out there that's really, it's hard to kind of make sense of which direction we're really going to end up going.
Understood. It kind of is looking a little bit like a trading range, and probably one thing that one of the analysts you follow brought out makes sense. There really isn't a reason to sell right now. There really isn't a reason to buy a run and ton more. So we're drifting upwards because the reasons to buy outstrip the reasons to sell. But earnings season's coming in less than a month, so we're going to end up getting a lot more. Just one of those doldrum periods between earnings releases with nothing better to do, right?
Well, that seems to be the case. Though you read a few headlines here, a few headlines there, and it makes you wonder, what are people really thinking? I mean, I was on a conference call, it's probably been 2 weeks ago now, that, somebody was coming in and basically saying, hey, we believe that there's going to be a rocky road, but that maybe we're going to head up for another year or two, which is just hard for me to fathom, Dave.
You can look at everything both ways. One of the things we were kicking around on the phone before going on the air, bond yields are falling by a little bit as the Federal Reserve opens a meeting. And how do you interpret it one way or the other? People are buying more bonds because they're afraid the Fed's going to increase interest rates. The other side of the fence, people assume the Fed isn't going to raise interest rates, and security at a really low interest rate is acceptable because they don't expect an increase. Both motivations can run. The one thing we know is we got a slow drift upward at the moment, and the Federal Reserve is meeting, and they aren't expected to do anything over the next 24 hours, right?
Well, that's true. I mean, that I would hope that we will have a better idea tomorrow, once the Fed meeting minutes or their meetings over. I'm hoping we'll have some tone as to what they're going to do. Because interest rates are just trending lower, and you and I have talked before about how it just doesn't make a lot of sense that interest rates are down at 2.6% thereabouts for the 10-year Treasury.
And the Fed's trying to shoot for 3, so they're not getting anywhere close to it. But at the same time, they recognize that we live in a global market. The European Union is a mess because Theresa May's parliament won't pass a Brexit bill, but they've already told the other Euros that they're planning on leaving, which means Europe is a mess right now. We've heard over and over again that Asia is slowing down, and as our biggest trading partner over in China, we don't want to see that happen. So there are a lot of reasons to try to keep the economy, what is the European term, accommodative at the moment.
Well, and that's true. But as growth slows, we want to be more accommodative. But we talk about headlines, and what the only thing we have to go on really is what are other analysts, what are other economists, what are the big guys really talking about? And I found this headline, kind of interesting. It says bulls looking for repeat of 2016 stock market rally will be disappointed. That's Morgan Stanley. I had a headline from BlackRock that I thought was really kind of interesting. It said first quarter earnings are going to be a real show me moment when it comes to the rest of this year. So, everybody's kind of on hold, really. They're waiting to see what the first quarter does, but the markets have to do something, right? So in this lull, people either have to be selling or they have to be buying, especially if they got cash sitting on the side. That a lot of people don't, they get really nervous when they got money sitting on the sidelines. And so we may be seeing more of that inflowing in. It's really hard to say.
I think the shirt sleeve explanation is there's nothing better to do. You might as well buy something. Is probably the simplest way. That the analyst that says the first quarter earnings could be really big, overweighted in terms of market impact, probably makes some sense just because of all of the indications we're getting that our domestic economy, while growing, is slowing down a bit, and how the corporations that we buy and sell stock in are responding. I mean, that is legitimately critical. So I kind of buy that analyst making some sense, because response to stimulus is how we measure the value of a company.
Well, that's right. And so it's going to be that first quarter may be the telltale thing, because, we talked last year about how things were slowing down, and we've talked about the first quarter this year, how things are slowing down. Well, that slowdown may not really, reveal what it looks like on the corporate side until we see the first quarter earnings.
Which kind of makes sense that first quarter earnings season is going to be, like I said, overweighted a bit more than it usually is.
I think so. I think that people are going to take a good hard look of not just what happened in the first quarter, but what are companies saying the weather's like. Do we have headwinds for the rest of the year? Does the rest of the year look good? It's going to be their forward-looking statements that are going to weigh pretty heavy, I think, on the market when those earnings do come out.
Understood. The week ahead is pretty quiet, except for the Federal Reserve 2 p.m. decision tomorrow afternoon. Federal Express is due to release their earnings at the end of the day. And boy, you have a really exciting earnings release that came out this morning, don't you?
Oh, yeah. It's like one of those things that we don't even have it around here. And that's Del Taco restaurants. Del Taco came out. They missed earnings by a penny a share. However, their revenue was better than expected. And so they also gave a full year earnings forecast for this coming year between 47 and 52 cents a share. Now, that's going to be really short of the consensus estimates, because they think they thought it was going to be about 57 cents a share. So obviously that's putting some pressure on Del Taco this morning, down about 8%.
And that's kind of an interesting bellwether. Mexican food, I don't know whether they're an economy chain or whether they're a quote and unquote luxury chain. Have always stereotyped the cuisine as being by and large staple restaurant food. So I guess we're talking about disposable income there as being a measure as to how a company like that does.
It's actually like a Taco Bell, but in a different geographical area that you don't see them everywhere.
Fast food. I know they're up in Orlando. That's as close as they get to us. So kind of fast food, right?
Yeah, exactly. Fast Mexican food.
Sounds good. So we've got a mixed bag of indications, a mixed bag of news, and really not a lot going on. And it sounds like a holding pattern until you look at the futures. And I'll set the table for it before we get to that. Yesterday, the Dow was up 65. NASDAQ was up about 26. Standard & Poor's were up a little under 11. Everybody was up more than 0.25%, which sounds like a bull market day, even though you and I are really hesitating to use that term at this point in time. 45 minutes in, Phillip, are we going to keep it going?
Well, it sure looks like it today, Dave. The Dow's up about 95 points. The S&P 500 is up 9.25. So both of those are about a third to about 0.4% increase. NASDAQ's right in there, the same ballpark. It's up $28.75. So all three of those indexes are in the same range. We've got gold and silver both up about 0.5%. The gold's up to $13.0860 an ounce. Hey, on the S&P 500 too, we've really crossed over the 2,800. We're at 2,850. So cool. Moving up towards 2,900, which I think is probably a pretty hard number to get through. Crude oil up 0.5%. Dave, I hate to tell you, but we are getting really close to $60 a barrel. It's $59.37 a barrel right now.
Well, poop. The one thing we don't like having going up. Overseas markets, Asia was mixed at the close early this morning. Europe generally trading up, even with the chaos going on over Brexit. And talking about the Treasury bills, 10-year Treasury yield as of a little while ago anyway, 2.62%. That's quite a ways away from the Fed's 3% number, isn't it?
Yeah, it is, and it's really far away from that 3.2% that we really were bumping up against last year.
Yeah, we're definitely still putting money into the bonds. That's without a doubt. Somebody ought to try to sort this out in light of an individual's retirement plans and what we ought to be thinking about. Phillip, somebody ought to be making an appointment with you today. How do I find you on the phone?
Well, they really do, Dave. We need to find out how much risk they have in their current portfolio, especially given where we are right now in the marketplace. So, and give us a call at 382-0037. Follow us on our website at statlerfinancial.com, and then like our page at Facebook at Statler Financial Services, where we post these videos every morning. I know you only get to hear us, but we do post them as a video on Facebook every day. So if you miss us, great place to catch up. And then every weekend, join us for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730.
And streaming on newstalk730am.com. I get a free cup of coffee out of the boss every time I plug that.
Hey, that's a good deal, man. Hey, you have a great, hopefully the rest of the day will be a little drier, and I will talk to you in the morning.
Sounds like a plan. Do appreciate it. It's 105.7 Light FM and Statler Financial Services' own Phillip Statler.
Hey, thanks for joining us today as Dave and I have a little bit of a conversation, a little different format today in that there's just not much really going on when it comes to economics and earnings right now. So a little lull in that those situations. But glad you tuned in today. Hey, if you are getting close to retirement, now's the time to have a X-ray report of your current retirement portfolio. It's easy, it's painless, just like a medical X-ray. We want to make sure nothing's broke and that you don't have any cracks or fractures in your portfolio. And the only way to do that is with an X-ray report. Hey, click on the link above or call our office to schedule your free, no obligation X-ray review. Thanks. Until tomorrow, have a great one.